Hi Ritesh,
Hi.
welcome to our show. So, can you just tell us a little about what Freed does and where did you get this idea from?
Well, so Freed, first, thanks for having me. Really looking forward to it. Freed actually is India's first debt relief platform. And why was it founded? I mean, basically to help millions of consumers who are financially distressed or over leveraged, right? And how we do that is through our innovative debt relief solutions, right? Which is aimed at solving debt as a problem from prevention to cure, right? We can get into the details of, what is prevention here, what is cure, but broadly to give you an idea, helping basically an everyday consumer move forward in his life, towards a better financial future.
Got it. So, how do you exactly help your customers?
So Freed, being a debt relief platform, it's important to understand or pertinent to note that we are a pull platform. So essentially, what it means is that borrowers seeking relief, right, wanting to be free from this debt burden are the ones who are approaching us, right? And when they approach us, I mean, there's a debt evaluation rather, that we do for every consumer. Now, depending on where they are with their debt, whether they are going paycheck to paycheck or they are already delinquent or behind on their accounts, there is a different tailor-made solution that's offered to them. So for a paycheck to paycheck consumer who's current but just barely making it by making minimum payments or barely struggling, not saving anything, just servicing his debt, that consumer, and again, with who's current, who's not behind, is what we offer them is a debt consolidation plan, which is getting him one single loan with a special purpose loan, which is meant to close out all his high interest rate loans, which are largely credit cards and some of these high interest rate personal loans that or the BNPL loans, right? And then giving him one single EMI, typically at a reduced APR and a little extended tenure, right? Which invariably brings almost a 30-35% reduction in what his monthly payments are. Okay. Imagine a blended APR, interest rate coming for this borrower at a 35-36% and him getting a 15% interest rate, right? The objective again being providing relief through a lower EMI payments, but not actually giving him a cash out. So our consolidation product is strictly for consumers with an objective to lower his monthly payments and give him that extra cash flow for his important needs in life, right? The other, of course, are for the not so unfortunate customers who have gone behind on their payments, right? Are facing that trauma or their mental anxiety of being behind on their debt. Of course, collections. So for these consumers, what we have is a debt resolution plan, right? Which actually works with these consumers in helping them budget, looking at their income, looking at their spend patterns, and empowering them to save funds every month, right? And as they save funds every month, we are collectively negotiating, right, their outstanding debt with the creditors and bringing them relief through that format. Eventually, with an objective to two things. One, get this guy debt free, get this consumer debt free, from this delinquent debt that he has, and B, also instill a habit of saving every month in the trust account, because as we know, the key to financial future is start saving, right? So as they go through this period of 18 to 24 months where they are saving and we are actually negotiating on their behalf, right? They get into this habit of saving, building, funds for their future as well. And once they're behind their debts, once their debts have been resolved, they can live a debt-free life and hopefully not come back in the debt trap again.
Got it. So, you partner with some banks or NBFCs to consolidate their loans?
So for consolidation, there is no partnership. We have a couple of lending partners who we work with who extend loans to these guys, and it's a very special purpose loan. Look, it's a very nuanced and differentiated product because you will not get this from a typical banker.
Right.
Our objective is, to offer this loan to consumers who deserve it, have the ability to pay, and also understand that they do not have an ability right now to get a loan because they're all burdened by high cost loans, right? But once those high cost loans are gone, right, and you consolidate them with one single loan, we know that their, what you call a technical term, which is FOIR, right, financial obligation to income ratio, we are able to reduce that for them.
Okay.
Right, and for that we have a couple of lending partners, yes, who we work with on that. For the resolution product, again, we are a borrower-centric platform. We are lender agnostic. So today we are settling with almost every lender. I mean, thousands of accounts cured. And this is with this length and the breadth of the lenders. Right from the top lender to a small NBFC as well.
What differentiates Freed from other platforms in India? I know there are no other major platforms in India right now, but can this service not be implemented by someone else if they come in the market?
Absolutely. I mean, there is what we are trying to offer to consumers, or what we aim to offer to consumers, is not a it's not a proprietary solution, right? It's all about navigating this landscape in terms of understanding the consumers' anxieties, challenges, right? And above all, keeping the customer interest in mind, right? And I believe, if you were to call it what is the defensible moat that we have, I believe it is the ultimate value proposition that you're creating for the customer, and empathy, right? Because who are these consumers, right? The ones coming to us. I mean, they're an everyday consumer who has fallen behind on his payments, right, and has been just left in the lurch to deal with his anxieties and to deal with frustration. And debt is a very negative emotion, right? The reason I say empathy is because with debt you get anxiety, fear, frustration, anger, whatever you want to call it, right? The debt always brings all that, right? And it's very important at that stage to build a rapport with the customer, understand the customer, understand his pain points, understand his aspirations, right? And also make sure that he's motivated, or you motivate him enough so that he believes, that he'll be able to resolve this problem. And you are that second chance or a lifeboat for such a borrower, right? So I would say empathy is the biggest moat. And of course, one of the advantages that we have is that between myself and my management team, we have over 5 decades of experience in the US, owning and operating 2 large debt relief platforms with almost $2 billion in consumer debt enrolled and settled.
Got it. So how does Freed make money in this process?
So we are basically, like I said, a customer-centric platform. So there is no fee that we charge, or there is no money that we charge from the lenders, right? As opposed to a post-lending landscape where you see mostly lender-centric players who are collecting on behalf of the lenders, right? And that's a very interesting gap they were trying to fill in the Indian landscape, where while all these avenues are, or all these mechanisms are lender-centric, we are a borrower-centric platform.
Okay.
Operating the same post-lending landscape, eventually creating a win-win for the ecosystem, but being a borrower-centric platform. So being borrower-centric also means that we charge from our borrowers. But when do we charge our fees? We charge our fees when we have performed, as in when we have delivered a relief to a customer, which is when we have delivered a settlement for this consumer who is behind on his debt. So success fee is what we charge once a relief has been provided to the borrower.
Okay. So it happens after the consolidation has happened and their EMIs have got reduced.
So on the consolidation, it is a new loan that is being provided to the borrower only after consolidation has happened. For a resolution, again, not to mistake that for consolidation, resolution product is where a settlement is happening, which is obviously some relief to the borrower in terms of he doesn't have to pay it in full, and the lender is happy to kind of waive off because the borrower has been behind due to a financial hardship, right? So even for resolution, we are only charging once we have resolved the debt. So a typical consumer is coming with 5 or 6 credit lines, and we will only charge our fees once we keep resolving the debt progressively for this consumer.
Got it. So this is charged as an out-of-pocket fee from these kind of customers, or
yes,
it is a percentage of the.
It is a
can
percentage.
Be a percentage.
It is a percentage. Karan, it can be anywhere between 10 to 15% of the debt that the borrower brings on the platform. See, we understood that, especially when you are dealing with a vulnerable set of consumers, right, who are low on trust and who have, been burnt before, right? Because they not burnt as in by anyone, but by their own misjudgments or financial mismanagement, right? you want to provide them a service where, you know, a relief has been offered to them, a saving has been shown to them, right? That's when they're happy to pay. And I believe customers are very value conscious. I mean, this is across the spectrum, not just for, you know, our customers, but overall. I think in India, we are a very value conscious customer base. If you show them the value, they will for sure, you know, pay you. But you got to deliver the, you know,
Value to
keep
them
delivering the
first.
value to the customers, right?
Got it. So what is your revenue, as if I have to talk about this 10-15%, that is your revenue, right?
Correct.
So that is what you report your revenue, not the entire debt that
No,
you...
no, 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 no.
It's the
That's an
10-15%
AUM,
only.
typically from a parlance of, you know, how the financial industry would work. You know, typically an AUM on our platform is a set of consumers and the collective debt load that we are enrolling on the platform, right? And our fee would be 15% on that AUM that we
Got
enroll.
it. So what's the current AUM?
So current AUM that we are managing on the platform is 1,500 crores, right?
Okay.
But of course, you know, we have been for the last 4-5 months, since we have you know, gotten on a growth trajectory, we are almost looking at enrolling. I mean, last month we enrolled about 95 crores in AUM, and we are targeting to enroll about 150 crores upwards in the next 2 months, and planning to end this financial year in March with about 350 crores per month.
Got it, got it. So this is the debt that you're resolving right now, and not the cumulative number that you have been doing, so that you have done so far, the 1,500
Correct.
number.
This is a monthly unique AUM that we will enroll on the platform.
Okay.
So far, we have enrolled about 1,500 crores, but as you can see,
Till date.
you know, till date. But as you can see, in the next, you know, 7-8 months itself, we are almost planning to enroll close to, you know, 1,000 crores.
So how much of that 1,500 crores has been resolved until now, and how much is unresolved and in
Sure.
process?
So we have resolved out of 1,500 crores close to about 430 odd crores already resolved with the lenders, and there is roughly about, you know, another 600, 700, you know, that is yet to be resolved. Right. Look, not every customer who enrolls on the platform is going to resolve his debt, right? And why would he not resolve his debt? Because, you know, various factors, right? I mean, this program needs a commitment, you know, an ability from the borrower to be saving every month as well. Unfortunately, not all of them are able to do this because their financial situation further worsens, right? And they have to unfortunately drop out of the program, right? So we expect, if you look at a matured industry like the US, where debt relief has been around for a good 20+ years, right? What is the graduation rate or a completion rate of customers who are enrolling on the platform? It's in the range of 50%. We anticipate that, you know, we'll probably get there in about a, you know, year or 2 years time.
Got it.
Yeah, because it's a function of, you know, network effect, function of, you know, awareness from the consumers. Thankfully, we are getting a support from the ecosystem, as in, you know, the lending ecosystem is very forthcoming in resolving the debt that we are enrolling for the consumers. Consumers are facing challenges, and you know, with the rising debt levels, obviously we're seeing consumers enrolling on the platform as well. So I think the making is there in terms of the tailwinds that we are seeing with worsening debt levels. You know, so the adoption in India, I anticipate, will be far quicker compared to. We are not going to take 20 years to, you know, get to that maturity level. In India, I think we'll get there sooner.
Got it. So if I have to talk about the numbers in terms of your revenue, can you disclose your FY24 revenue?
Financial year 24, I cannot, unfortunately.
Okay.
But all I can tell you is that, you know,
For 23?
For 23 and 24, we have had a 3.5-4x growth.
Okay.
You know, we as we are building more avenues for the consumer to make it. I mean, because see, we started this space in India when there was no concept of debt relief, right? To get the pricing right for a customer segment like this, right? It took us 3 revisions, 3 pivots to actually come to the right pricing, and we finally figured that the right pricing is to not charge anything until, you know, you succeed for the borrower, right? And we struggled, to be honest, to understand because it's not a plug and play kind of model. In the US, the industry is pretty established. It's a regulated industry in the US as well. For any new incumbent entrant in the US market, it's very easy to follow the set practices, you know, and just be in business, right? And in India, creating this category, managing customer expectations, navigating the landscape with the lenders, regulators, and everything, right? So we had to work very hard, work with many customers. So far, we have enrolled almost 30,000 customers on the platform, right? To arrive at the right pricing, and I believe, you can't be more fairer than this, as in not charging any fees until, we have not resolved the debt for the consumer.
Completely.
Yeah.
So what is the ticket size that you typically start with?
We have a minimum ticket size of 50,000 rupees for a customer to owe collectively across different, unsecured loans that he has. But that's the entry point, right? 50,000 is the minimum debt that we take on the platform. But Kanan, the average debt per borrower has been on a constant rise for the last, I would say, almost 2 years. When we started off, we were seeing 5.1 lakhs per borrower. That, as of last quarter, is at 5.7 lakhs.
Okay, average borrower.
The average debt per borrower
that you have on your platform.
that we have on our platform.
How does the unit economics work? Say, for example, if the revenue is 100, and how do you ultimately translate?
So I'll give you the other way around. If the AUM is 100,
okay,
right?
AUM
if the AUM is 100, you're charging 15 as a revenue, right? Thankfully, in India, we don't have a huge customer acquisition cost, right? It's not as competitive a markets yet. It's still a blue ocean that we are operating in, delivering, huge value for a need, which is pretty tacit, right? So CAC is not really a concern. It's the completion rate that determines your eventually your take rate or yield or AUM, yield what you're going to generate, right? So on 100% graduation, you're going to be making 15% of the, of the AUM that you
Currently,
enroll.
it's 30%.
Currently, the graduation rate is right around 30-35%. 30%, I would say, higher, early 30s, right?
And but let's assume on a 100% graduation rate. That's what you're saying.
You're looking at 15%.
Okay.
Yeah,
15.
that's the take rate.
That's the revenue.
That's the revenue.
You have individual, advisors. So you have individual advisors advising all of these clients?
So we have leveraged tech to a very large extent, right? Traditionally, this business has always been, you have to look at it from a lens of financial services, where there are advisors, counselors, right? And that is a uniqueness for the Indian market, right? Why traditionally in the US, it is driven by counselors, agents talking to the customers. In India, what we have done is we have leveraged technology, because eventually all these borrowers who are enrolling with us, or consumers who are enrolling with us, right? Guess what? Where they took the loan from? All digital platforms, right? So if they've been taking loans on digital platforms, we believe that we can acquire them on digital platforms and even service them on digital platforms, right? But we do understand there is a human touch that's required for this industry, for this business, right? And that we provide through counseling. But many such mundane and repetitive tasks, right? For example, updates on the program, progress of the program, the payment processing through the platform and everything. That's all done through our, online dashboard the consumers have.
Got it. How do you arrive at your gross margins at a revenue of 15 rupees?
Like so we are currently operating at a pretty high gross margin. I mean, I would say upwards of 70% as far as the gross margin goes.
How do you arrive at the cost?
So basically, what we look at is, if you assume, the marketing cost, and take the cost of the debt counselors who are enrolling consumers as well as the marketing cost, then pretty much what you're left over with is the fixed cost and the servicing cost of these consumers, right? And the servicing cost of these consumers typically is the cost that we attribute to the business, right? And given that, that's the 70% kind of, gross margin that we are looking at.
Got it. And after that, how do you arrive at your bottom line?
So the bottom line is, of course, the similar, the contribution CM1, CM2 that you do, right? And once you have the fixed costs taken out from the, the sales and whatever the sales costs are and the marketing costs are, then it's just the servicing cost, and the fixed cost comes to the, straight get to the EBITDA then, right?
Got it. So what made you come back to India, since you were running a debt platform in the US? What made you come back to India? Did you see an opportunity here, or how was it like? Why did you have to leave US? Because we see a lot of Indians leaving out for US,
Well,
UK, Australia.
that's not correct, Karan. I believe there has been a kind of reverse migration last few
Okay.
years, right? In my case, obviously, it was very personal. The decision to not stay in the U.S. Eventually moved back to India, right? And so, while having run, owned and operated two large debt relief platforms in the U.S. With almost $2 billion over $2 billion of debt enrolled and settled, I already had a back-end office in Gurgaon, right, which was doing this. So, of course, when I look back in 2017, 18, 19, right, I don't believe the market was ready back then for a debt relief platform. But come COVID, when we all got time to kind of introspect and look at how things are and all, and I could very clearly see a demand, a need for debt relief, debt management services, especially given that you had rising debt levels, consumption at an all-time high, credit at an all-time high, inadequate financial literacy, I would say. And third, of course, the most important, which I felt was aspirational, spending, meeting easy lending, right? And I think that's what created. So I believe we're at the cusp of, this really, as far as the debt relief services go, really, I believe this category or this vertical has a huge need and is going to explode.
Can you compare the debt market, debt advisory market in the US from that of India, as on date, if you have to talk about it?
Well, you can't really compare. I mean, you're comparing like two very one very established industry to an industry which is in nascent stage, right? But given that there is a very immediate impending need for debt relief in India from that aspect. But let's just talk about the US, right? So US, this industry pretty much started right around 2002-3, right? And the industry got regulated in 2010, okay? Now, what was the regulation about? The regulation was that, the debt relief platforms cannot charge upfront fees. So charge a fees only in the US, right? Charge only when you have performed, right? 2010 and fast forward 2024, it's a $50 billion industry annual, right? Now, just to give you a context, what is $50 billion? That's almost 3% of the total unsecured outstanding in the US, which is 1.7 trillion, right? So 3% of that is $50 billion, which was enrolled in debt relief last year, 2023, right? If you look at India as a parallel, right, the total outstanding in unsecured loans between personal loans and credit cards is $220 billion as of last quarter, RBI sectoral report, right? And this is between all unsecured loans, credit cards, personal loans, other personal loans, right? Consumer durable loans and all, right? Consumer loans, right? Now, this is $220 billion. What do we anticipate the stress to be, right? Even if we take the stress at, let's say 5-6%, right? You're looking at a $10 billion upwards number, right? And if you were to look at your, and this I'm talking the loan book that is on the balance sheet of the lenders. There's a huge write-off, right? Almost 10 lakh crores was written off, by banks in the last 5 years. That's a huge number again, right? Out of that, even if you assume 30% was unsecured, that is 3 lakh crores, which is out there, right? Now, if you add all these numbers, right, there's a huge bad debt, NPA, written off debt that's there. And the customer base is a very classic intersection of, the heterogeneity that I'm seeing in the Indian customer base. One customer will have can very likely have a written off debt, an NPA, and a pre-NPA loan, right? So given that, I think it's almost a $35 billion market in India that we are targeting, that we are looking at.
That's a big number.
That's a big number, huge number.
Right.
Yeah.
As good as the US, because they are around 50 billion.
US would be maybe 3-4x of this, I would say. Because
Okay,
even if you
market,
zoom that, exactly.
Target market, there would
market,
be $200
correct,
billion.
Correct.
Can you tell us one example, like the worst that you have seen so far, like a person getting into debt and Freed helping them resolve that?
Well, Karan, there have been various. I mean, anybody coming to us, let's understand that, A, nobody wants to default willfully, right? Besides we being a pull platform, consumers are interested to resolve their debt and have an intention but limited capacity to pay. That's the reason why they are coming to us, right? So the need is there, underlying need to resolve debt, and that's all because of many situations, right? It's just life happening to them, to be honest with you. It's somebody has a job loss, somebody has a pay cut, somebody got a business loss, somebody had a medical emergency. There are many instances. I don't know which one to count, but we have had situations where there was almost a suicide attempt by a borrower, right? Because he couldn't deal with the pressure and the agony of going through this, and we resolved his debt. I mean, I don't think I think life is way more than
Yeah,
a few lakhs, right? And we were able to offer that help to a borrower by resolving his debt. And there have been many such instances. Someone lost his parents in COVID, and huge sum of money was spent in the treatment,
Funeral,
right?
yeah.
In the treatment, funeral, whatever it is, right? And saw himself deep in debt, had a responsibility of small kids and family as well, and was struggling, right? And was going behind on his payments, was behind already, right? Explored all avenues to get help to repay those loans, but could not. The late charges, penalties kept adding up, right? And such consumers who come to us, and that's the reason I was saying, right, the empathy as a moat. You cannot look at this as a transactional business. While you ask me the transactional questions in terms of the AUM, the EBITDA, and the gross margin and all, but deep down there is a very impact and the spiritual side of the business, which is, if you look at the benefit for the customer, when a customer is coming to me, he's not seeking savings from his debt. He's just looking at a way to get out. And I'll give you a very classic example. When a debt goes bad, Kanan, then all these negative emotions I talked about, anger, frustration, depression, right? Those emotions lie here in the heart, right? And when you make a decision to go for a debt relief service or, trust a platform to help you with debt, right? You can't make that decision from here. You have to make the decision from here, right? And when you make that decision from here, you're not looking transactions. It's not an investment for him, right? It's basically his last hope, right? Or his second chance, or a lifeboat that he's looking at, right?
Right. So, can you tell about the financial situation of that person? Like how much he was earning, how much were his needful expenses, and how much were his EMIs? And
Sure.
what happened after you provided him a
Sure.
debt resolution plan?
Sure. So this borrower, briefly that I can recall, right? I mean, vaguely that I can recall, had almost 10 lakhs in debt. Okay.
Okay.
I do remember he was from West Bengal, and with 10 lakhs in debt, with a split of personal loans and credit cards, almost 50-50, right? He was looking at a minimum payment of, minimum 35,000 that he had to make, right? Now, so long as his salary was about 70-80,000, I think he was a medical representative, right? So long as his salary was 70-80,000, he could manage it, because it was a squeeze, but he was able to manage it, And I remember he had two small kids who were going to school, and the school fees came up, and someone in his family fell sick, right? Suddenly, that 35,000, that he could afford earlier to repay, he could not anymore, right? And from what I understand, the job where he was making about 70-80,000, right? That medical representative job that he had, I think there was a pay cut that he got, or his commission structure changed or something, making his income about 50,000, right? And the moment it became 50,000, right, there was no way he could have lived with in just 50,000 rupees, given that 35,000 was his EMI, towards these loans. Now, what does such borrower do, right? If he has a family to feed, he has to take care of expenses, right? He dipped into savings, and whatever he could, pay. When it became unbearable, he started going into default, right? And the stigma of being in default, and some collection pressure and all that mounting, right? It's very difficult when you're in that when you're staring at that uncertainty, right, with dependencies, in family. And when he approached us, we know that he was 109, 120, 130 days behind already on his payments, right, with constant threats.
He must have been an NPA
He
for the
was beyond
last,
NPA, correct. He was beyond NPA, right? And with the situation of the family and all that, of course, first was to understand, make him believe that he can do it again, he can revive and regain his creditworthiness, right? With minimum savings, he started with depositing 15 to 17,000 every month into a special purpose account that we create for all such borrowers. It's done with a trust, right, managed by a trustee. Because, like I said, like I mentioned earlier, that the key is for them to start saving. And we don't let them save money in their own account because, to begin with, their mess, we don't trust them with managing their own finances, right? That's why they landed in this trouble. So we say that, okay, it's just like a piggy bank concept, right? Where you save every month, towards a special purpose. And that's what they do, right? And that maintains that discipline as well. On a predefined date, that money, from their salary account or from their main bank account hits that special purpose account. Of course, through their consent, they do an e-natch and that money goes there. And talking about the specific borrower, 15,000, and he had about 7 or 8 creditors, totaling up to 10 lakhs, right? He started saving 15,000 every month, right? In the first 2 months, we were able to resolve one of his debts. Month 5, there was another one, right? And by month 9, we had almost, about 30% of his debt resolved, or 35% of his debt resolved, right? People have the stigma where they don't talk about debt with their own family, right? I remember clearly that, his father-in-law got to know about it, right? And father-in-law said, okay, I'm very happy. I mean, of course, he was upset the fact that, he had not informed him about this, right? But when he knew that he had enrolled into our program and we had already knocked out 35% of his debt, his father-in-law helped him with some additional money, 3-4 lakhs towards this program. And he was able to come up with some extra funds as well, right? And in about 12 months' time, he was debt-free. I mean, for the entire 10 lakhs, he's our, all-time brand ambassador, at least that one customer I can think of. There are many more, of course, there are many more. People lost their, families in COVID and whatnot, right? So I remember helping out many such. Recently, there was, and it doesn't happen to marginalized or consumers with limited income. Karan, the idea was it can happen to anyone. I mean, it's just life, right? I mean, there was recent layoffs that you must have all heard of about 7-8 months ago, where many IT companies in Bangalore laid off people, right? And we had engineers, enroll into our program. The idea being, it can happen to anyone. It's just not, that it can happen only with the people with certain income bracket. We've had surgeons, pilots, engineers, professionals enroll into our program as well.
Got it. And this was the same person who was thinking of quitting on his life.
Absolutely.
So life changes so fast.
Absolutely.
Is that you need to have good advisors.
You need to have good advisors, and you need to believe in that. It's just that, availability of such platforms who will empathize with such borrowers and keep the customer interest first, right? I think that's the key. That's the most indefensible moat that you can create, especially in a business of debt relief.
Got it. Do you face any regulatory challenges in running a debt advisory platform in India?
So, it's a debt relief platform, the way we call it, right? Of course, an advice, but of course a resolution, because advisory is just limited to advice. When you are providing relief, it's pretty much, the whole 9 yards that we do with the borrower. So, just like any industry, Karan, I mean, when you're creating an industry, when you're navigating a new, creating a new vertical, navigating some landscapes in terms of, the regulation, the stakeholders, whether it's a regulator or lenders or borrowers, right? Before a regulation can come in, right? The best thing that you can do is A, self-regulate yourself, right? B, in our case, clearly the fact that, we have exposure to the US debt relief industry for myself decade plus, right, is to adopt the same, the best business practices from the US, right? And this is what we exactly did. And the last, is not the least, but how do you create the maximum value for the customer, right? Because the worst thing that you can do being in this business is make the borrower situation worse than what it was before he enrolled with you, right? So if you are cognizant of that, and if you empathize with the borrower and try to create the maximum value for the borrower, I believe you're already in a good spot. When a regulator looks at a business like
Yeah.
yours, right, they will already know the good that you're doing for the ecosystem. As far as the need goes, I think I don't need to talk about the need for debt relief. I think the way the consumer debt levels are rising. So what we are also doing is, advocating the need for debt relief with the lenders as well, and we have seen very active participation. And also with the lawmakers, with the regulators, in terms of the white paper that about the construct of debt relief and what we are trying to do, and we have seen some good encouraging words from them as well. I don't know when will it be regulated, but we'll of course keep pushing for advocating regulation in this space.
So do you face, at your partner's level, do you face any challenge while consolidating your clients' debt as far as the regulation regime is concerned?
So consolidating again is Kanan, where we are closing out the high cost loans and giving him one single loan where there is no regulation involved at all, because a borrower can choose to close his credit cards anytime, right? So consolidation is a straight kind of balance transfer,
Got it.
but with a uniqueness in the fact that the money is in the escrow meant for purely a purpose of closing out the lines, no extra cash out to the borrower. That reduces the monthly obligation, right? So that's the consolidation piece. The settlement piece is something where the borrower is saving funds in a trust account, his own trust account or escrow account, right, which is created for him, where we are resolving the debt. So there's no regulation preventing again this,
Right now there's nothing.
because even if you look at a business, right, so businesses have seen this waivers and restructuring and all that, right? I mean, it's very common thing with on a business loan or corporate loan for this thing to happen, right? It was just not available to retail borrowers, right? So what we are now trying to do is actually bring this relief to the retail borrowers as well.
Got it. Understood. So, if anyone has to enter the space in India today, would you advise them to do, and what would be your advice, like how to start this business, if at all they have to?
Well, I think you will invariably see a few companies entering this space. As you know, we are a we are a institutional funded entity. We closed our Series A just about a couple of months ago. So there will be traction in this space for sure, right? My only advice would be that debt relief is all about borrowers, right? Debt relief is all about empathizing with the borrowers, understanding the borrower pain points. Every case is unique, and your ability to tailor make that solution and to be able to offer that with passion to consumers, right, is something that will be paramount, A, of course. B, it's in a nascent stage. It's in early stages, right? So be prepared to navigate this landscape with, as far as regulation goes, as far as your place in the stakeholder in the ecosystem goes, right? And C, of course, have a long-term view, because this is not a small, just a business which will have a life cycle of 2-3 years. I mean, the way I look at it, it's a business that will outgrow us, that will outgrow me, because the demand for debt relief, will stay and will be there.
Right. Thank you so much. I think this was quite an insightful conversation that we have that we had with you.
Yeah.
Any closing notes that you would want to say?
Well, I mean, as far as the industry goes, I think the space that we are in, Kanan, it's a win-win space it's a win-win proposition that we're trying to create for the borrowers and the lenders both. Looking at the current landscape, the economic landscape, we are seeing a huge rise in debt levels, rising consumption, meeting easy lending or easy borrowing that the borrowers are seeing, right? So I think there is a need for responsible lending and cautious borrowing, right? And that's where Freed, we are trying to basically work with the lenders in terms of, salvaging their bad debts or debts that could go bad, right? And with the borrowers also educating them, right, on the very concepts of financial literacy in terms of, what loans are bad, what loans are good. We're not saying loans are bad. We're not saying, debt is bad. We're saying just differentiate between what is good and what is bad, right?
Got it.
Yeah.
Thank you so much. It was an insightful conversation.
Thank you, Karan. Thank you so much. Yeah.